Why do other countries buy U.S. debt? Because most of y'all in the comments, oh, the U.S. is so sucky, and they're doing this wrong and they're doing that wrong. And I'm not saying you're wrong, but what I'm saying is if everyone knows that the U.S. system is so messed up, why is there so much demand for U.S. debt? Now, some of you may be like, I'm going to click away because I already know this. We need U.S. debt because no, I promise you, I'm going to show you something that you've never seen before. It's going to rewire how you look at investing in your portfolio, how you look at investing overall, how you think about this U.S. economy. I'm going to put you up on all type of game. I'm going to connect a bunch of dots. You will come to a conclusion. I'm going to make this conclusion so crystal clear about where you should be putting your money. But we need to look at the industrial complex of the American debt economy. You already know the drill. This is not investment advice. This is for information and entertainment purposes only. I am not a financial advisor. I am not your financial advisor. Make sure you do your own due diligence. And do not forget, with any type of investment, they always carry a risk of losing all of your money. Don't you ever forget that. So with that being said, enjoy the show. So last week, we spent a lot of time talking about AI, and I've been saying this to you guys over and over and over again, that the U.S. is putting all of its eggs into one basket. It is going all in on this AI play, okay? So I'm not going to beat that dead horse at all. We're really not going to talk that much about AI, but I figured this was a great opportunity to explain the industrial complex that is the American U.S. financial institution. And thus, the main question that we're going to start off with is, why do other countries buy U.S. debt? So if I'm telling you that the U.S. is investing money in this, where's it getting the money from? And then who's investing? Because most of y'all in the comments, every post we do, you're talking about, oh, the U.S. is so sucky and they're doing this wrong and they're doing that wrong. And I'm not saying you're wrong, but what I'm saying is if everyone knows that the U.S. system is so messed up, why are foreign countries investing in the U.S.? Why is there so much demand for U.S. debt? Now, some of you may be like, I'm going to click away because I already know this. We need U.S. debt because no, I promise you, I'm going to show you something that you've never seen before, and it's going to rewire how you think about this U.S. economy. I'm going to put you up on all type of game. I'm going to connect a bunch of dots, and thus you are going to change. It's going to rewire how you look at investing in your portfolio, how you look at investing overall, and thus you will come to a conclusion. I'm going to make this conclusion so crystal clear, and you're going to get so much clarity about investing, about where you should be putting your money. And I'm going to give you all type of game on this episode. But we need to look at the industrial complex of the American, I would say the American financial economy, but that's not the case. Specifically, the American debt economy and how it works. So first of all, I do want to do a really quick aside. And I know some of you are already thinking about the U.S. is a corporation. And we, under our birth certificates, we are, that's a whole other conversation.
I don't even know if you call that a conspiracy but
I know, or real, I don't know, but we're not talking about that right now. Somebody asked me in the comments one day and was like, can you talk about the sovereignty or somewhere?
Talking about like your social and your birth certificate.
And I was like, you might be right, but we don't talk about that on this channel.
Yeah.
Because what a lot of times what people are talking about right now is like declaring your own sovereignty so that you are no longer a part of the, listen, we're not doing nothing illegal. And is it real? Probably not. Is it real? Yes, but can you do anything about it? No. So we're only on this channel, we're going to talk about things that are legal, ethical, and that you can do things about. All right. Okay, so cool. U.S. debt. First thing we're going to talk about is, why do entities, countries, foreign investors buy U.S. debt by way of U.S. Treasuries? Why is it so in demand? The main reason why U.S. debt is so in demand is because America exports dollars. Okay? America exports dollars because around the world, U.S. dollars is the common currency for oil, commodities, global trade, and just international business dealings. So we already know this. We have a dollar denominated global economy.
Right.
And so what ends up happening is when countries use the US dollars, they typically end up having a surplus, right? Like, you don't want to spend more than what you have, they have a surplus. And so in order for them to make money on the surplus, they have to park it somewhere. They park it in U.S. Treasuries.
So when you say a surplus, you're saying a surplus of what, U.S. dollars?
So like if you're a country and you're like, hey, we need to buy oil for our country, we know that oil is traded in petrodollars. So we need to buy, we need $50 worth of oil. Let's get a little bit more so that we're not just sitting here looking crazy.
Gotcha.
Okay, so all right, we'll get $100 worth of, we get $100. We'll spend 50, and 50 we will use it to park it to buy treasuries. Okay. So that's the typical reason that they end up having a surplus.
Gotcha.
So because they have a surplus, this increases the demand for U.S. treasuries. One of the reasons why treasuries are also a safe haven is because treasuries are super safe. They're super liquid. All the things that we've talked about in the past with treasuries. So then the question is, who is actually buying them? Some of y'all think you know the answer, but I promise you I'm about to surprise you. So first we're talking about major foreign entities or outside the U.S. Japan, they're the largest foreign country holder of U.S. treasuries.
Yep.
The U.K., believe it or not, is number 2. China, we already know China. We're going to talk about China in a minute. Oil exporters, because petrodollars, right? That same thing I just explained. And central banks around the world. This is a common currency that they use for their currencies.
What
so
about any sovereign wealth funds?
Sovereign wealth funds. Remember, we talked about China. They definitely have treasuries. They don't have a sovereign wealth fund. They have a system that works very similar to sovereign wealth funds. But yes. So when you think about large sovereign wealth funds like Norway, they're a largest holder of equity. So they may have some debt, but U.S. treasuries is not that large to compete in this arena that I'm talking about right now.
What made me think of it, because you said the UK? Did you say UK?
They have a huge, they're not one of the larger sovereign wealth funds, but they have a huge holding of U.S. treasuries. Okay? Even UK institutional investors as well. In addition to the country, they have a huge holding of U.S. treasuries.
Gotcha.
So here's the thing though. A lot of times when we think about large holders of U.S. treasuries, we think about foreign institutions, but they're not even the largest holders of U.S. treasuries. We talked about this on the Sovereign Wealth Fund episode as well. I promise you I'm getting to a point, so simmer down. The major holder of U.S. treasuries is actually, guess who?
The U.S.
U.S.
Ding, ding, ding.
The U.S.
The U.S.
citizens.
Citizens?
Yes.
I was about to say the U.S. Treasury.
The U.S. Treasury.
That's what I was going to say.
Well, they do buy their own securities back, but
Eventually.
I mean, sometimes they buy back before maturity.
Oh.
Yeah, they've been doing large buybacks all year. That's a whole nother conversation. I've been covering that on my shorts. They've been doing large buybacks all year. That doesn't necessarily mean what you think it could mean. It could just mean maturity management, right? So if they realize that they have a whole bunch of securities maturing at a certain date, so like we have this huge maturity wall between like right now and August. They bought a bunch of treasuries. I'm sorry, between right now and like the end of the year, August is a huge date, right? Where a lot of them are. They bought a bunch. So that's probably just to manage the maturity wall. There are a number of reasons why they would buy back treasuries. We're not going to go on down that road right now, but U.S. human beings, which goes into the play about liquidity harvesting, because guess where they are? Retirement account.
In the episode that you spoke about, what was it, last week or
last week when we talked
or
about
2 weeks
this.
ago?
Oh, we talked about this a lot.
Yeah.
Because people don't realize how major U.S. retirement accounts or U.S. individuals are the role that they play in this whole thing.
Right.
Right. And this just a real quick aside. I had a whole conversation, and y'all let me know philosophically about how you feel about this. I had a whole conversation with a really good friend of mine. And y'all know how I feel about SpaceX, right? We talked about this last week. You already know how I feel about SpaceX. I don't hate SpaceX. I just think that the story and the investment in the product is a crock of bull.
Right.
That's just me. He's literally, this is a whole, the crock of bull. Okay. And a lot of people feel that way. But then the same person that agreed, like, oh my God, it's a crack a bull, and they're like, yeah, I don't know what you're talking about. I'm buying some. And so my argument is you're no different than them. Because you know it's a crack a bull, but you're investing your money, and they're like, no, I'm gonna just do a quick little trade real quick, make a couple dollars. I don't care if you're buying it for 5 minutes or 50 years. You're still investing in it. You're still supporting this with your money. So sometimes you have to make a decision. It's a hard decision, but sometimes you have to make a decision. Okay, that's just my quick aside. So let me know, what's your philosophy on this, right? You're an investor. You have to remember, when you're an investor, or if you're playing the stock market, or if you're day trading, you have to remember what you're saying with your trade. I'm investing in you. I believe in you. You can't say, I'm buying this, and then
don't believe in it.
I mean, you can, but realize that you're contradicting yourself.
You know, that's so crazy that you just said that, because I was just speaking with so he's a psychologist, but he doesn't deal with people. He just deals with the research of psychology. And I asked him what was the most interesting thing that he has learned or researched about psychology.
People do different things than what they believe.
It's called, do you know what it's called?
Cognitive dissonance.
He said that was his most interesting thing that he learned.
Cognitive dissonance.
Cognitive dissonance.
Yes.
And he was just basically saying that it was just basically when you have a belief of something and you do the complete opposite, but now you have to change your belief to justify your actions. And yeah, it's crazy that you just said that. And I just talked to him yesterday about that. That's the crazy part.
So cognitive dissonance is a really interesting thing. And here's my theory around cognitive dissonance. First of all, we all have it. We literally separate ourselves in our brains from, we do this one thing, you're like, oh, I want to eat healthy. And then you eat them cookies, just leave with cookies at midnight. Okay.
You speaking from personal conviction right now?
Experience. So I had a huge life event happen this weekend, and I was tired. It was a good event. I was very, very physically tired, and I never do this. And I treated myself to some midnight cookies. I never eat super late at night, and I even like healthy food. And so I had some cookies, and so yeah, there we go. That was that conversation. So cognitive dissonance is really, really interesting. We all do it. This is what I want to say about this. This is just like a quick life aside. Your ability to understand your own cognitive dissonance is a direct function of your level of consciousness. Okay?
Bar.
Your ability to how often or how frequent and how dichotomous this cognitive dissonance is a direct reflection of your character.
Super bar.
Super bar.
Hot fire flames.
Hot fire flames. Hot fire flames. Brenda's still in my swag. It's not even my swag. Actually, that's one saying that I stole from Joseph's Godfather. Shout out to Mark Brown. So anyways, it's a direct reflection of your character. So be kind to yourself when you experience it, but have enough love for yourself to practice mindfulness so that you can recognize it. And then I'm going to go on the extreme. People like narcissists, the problem with narcissists is they will have cognitive dissonance and always force their beliefs to justify their action. Whereas sometimes people will change their action, the good people will change their action to justify their beliefs. They will always force their beliefs to justify their action. That's when you get into the gaslighting. Because I don't gaslit myself. It's easy. I can gaslight you too. Cognitive dissonance is a hell of a drug.
Shout out, Dunny. All right.
Shout out to Donnie. Tell somebody they horrible right on stage while you being a horrible person. Cognitive dissonance. You're a horrible person. Don't you think that should be horrible? All right, I'm sorry, y'all. We went on a tangent. Americans own the debt. Practicing cognitive dissonance. Many of you are doing it right now. And not just in U.S. debt,
That's
right?
deep.
This is in investment and securities. You're investing in something that you don't necessarily believe in. This could be willingly or unwillingly, because a lot of stuff is happening in retirement that you don't even know. That's why we do this show, so you know, and you can align your actions with your beliefs. Hey, real quick, one thing a lot of people still don't realize is you can actually hold assets like crypto inside certain retirement accounts. Platforms like iTrust Capital, they let you buy and sell crypto through a self-directed IRA with potential tax savings. And if you use my link down below that I'm giving to you, they're going to put $100 in your account to get you started. So if you've been looking into alternative ways to diversify your retirement assets, because of some of the stuff that we're talking about on this episode, it's at least worth researching. So go to the link down below so you can get $100, and I'm excited for you. Now back to the discussion. You're investing in something that you don't necessarily believe in. This could be willingly or unwillingly, because a lot of stuff is happening in your retirement that you don't even know. That's why we do this show, so you know, and you can align your actions with your beliefs. Okay?
Yeah, you said that last week. What were the two that were in the retirement from the research that you did that people really didn't know?
That they didn't know that they had CITs.
The CITs. Yeah, the CITs and
Which
within the
CITs
CITs
is private credit.
Yeah, and like you were saying last week, like people complaining about it's bull, it's a crack
Right,
of bull.
private equity is a crock of bull, but meanwhile you're supporting it with your dollars.
In their retirement and don't know it.
And so here's the thing, I'm not saying that private equity is a crock of bull, nor am I darn sure not saying that Treasuries is a crock of bull, but I want you to line up with your beliefs. That's it. So you're going to have to do a little bit of homework and maybe bust some moves. That's it. Okay? All right. Another thing people don't realize about this, I kind of alluded to this, is that China is not our number one debt holder anymore. They reduced their holdings from like 1.3 trillion down to like a little over 600 billion. 600 billion. And so China is not number one. UK is a big player versus Japan, and then UK is a big player.
With Japan being one of the largest shareholders of these treasury bonds, right? What happens when the maturity wall does come about? Because as far as I know, I could be wrong, but treasury bonds consist
We're gonna get, I know your question you're gonna ask, we're gonna get to that in a minute.
Okay.
Right. So whatever your thing is that you're about to say towards the end of that, the real question is like, how do we pay it? That's really
basically,
yeah,
essentially.
I know. I kind of know how your brain thinks a little bit. Before we get into that, there's a couple more things I want to say. Okay, so I gave y'all foreign holders of. I talked about foreign holders and the fact that regular citizens hold debt. I want to talk about in what form in the real ranking. The number one holder, once you classify it a little bit differently, of U.S. debt is pension funds, mutual funds, pension funds, retirement accounts. It doesn't only have to be retirement. Okay? So you got Vanguard, the BlackRocks, they are the main holders of U.S. debt.
Sovereign wealth funds, the foreign governments, the pension funds, but then on Federal
Reserve.
Federal Reserve.
Yeah, I'm about to get to that.
Oh.
Yeah, that's my next thing. The Federal Reserve holds U.S. Treasury. Remember, the Federal Reserve is not technically federal. We talked about that as well. They are a bank owned by banks. Another big holder is like state and local governments. They hold U.S. Treasuries as well. Other banking institutions that are not in the Federal Reserve, that are not the Federal Reserve, they own treasuries. And just regular people, just outside of funds, outside of pensions, outside of those types of institutions, they hold a good portion of it as well. All right, so this is what I just covered is where most people stop. Like some of it is a review, some of it is new for you, but most people stop. But what you fail to do is say, okay, if America is a corporation, which we know it is, they're issuing debt, what is backing the debt? Okay?
Valid question.
What's backing the debt is tax revenue. Your income taxes. Corporations' taxes, if they paid the taxes. So this number one is tax revenue. The next one is the productive capability of the U.S. as a whole. Number three is the ability to issue new debt, because debt can be paid off with old debt. We talked about this as well. So when the government issues debt, it's like, okay, in order to pay this off, tax revenues are going to pay it off, or we can issue some new debt. Companies do it all the time. And this is one thing I was trying to teach you in the past is you need to start thinking, if you're going to take out debt, that this may be a longer term play. Those maturities may not match up. Hey, I'm financing this for the business. I get a bank loan. It's a 5-year bank loan. and you're trying to fit a square peg into a round hole, you may have a longer play. It may be more than 5 years. So you need to be thinking, I need to refinance this debt, as opposed to, oh, it's coming up 5 years, I got to pay it off. You need to be thinking about that day one, because the maturities might not match up.
So basically, it's like the government is taking
Companies do this all the time.
One credit card to pay off another credit card.
Yes, but companies do this all the time. The last thing that they're using to finance their debt is the dollar demand, which is similar. Remember, I told you people need dollars to do trade. Okay? So, but the two main things I want to talk about is your tax revenue and just the overall U.S. economy. Okay. Now, that's also some of you that's like, just a little bit more quick on the uptick. That's where you really stop. That's our tax dollars. Nicole, you didn't tell me nothing new. Let's talk about how the U.S. does. Now, remember, the U.S. is a corporation. So if you are a corporation, okay, and you get debt, and then you're like, hey, what's backing this debt? The sales of my product, which is tax dollars, okay? The government is paving the roads, providing services in exchange for your tax dollars, okay? So what other job does a country have to make sure that they maximize their income? I'm going to tell you.
What other job does a country have?
Does a company have in order to, what there are a few things that a company can do to maximize their income. They can either cut costs, become more efficient, get really good at marketing. And so the form of that within the U.S. is, one, they're going to grow their tax base. They want to grow their tax base. They can grow their tax base in two ways. One, attracting more people. They've been talking about they don't want more people. Or increase the birth rate. Abortion. So you're wondering why abortion is getting abolished. Because our birth rate has slowed. And so they're already thinking 30 years down the line, if our birth rate has slowed, that means less tax dollars. So we need to keep you jokers from stopping yourselves from having babies. Now, there's a couple things. I'm going to take a real quick little left aside. It's going to seem like conspiracy, but I promise you you can go and research all of this. One of the things that the government is really good at is they have all of this data from Planned Parenthood, from startup program, Head Start programs, welfare, all that, to see the impact that it does on the tax base, either through increasing people's income or increasing the birth rate. So what I want you to think when you see these government programs, the government programs, yes, we want to help our people, sure. You already know my theory on that. They don't care about us. But we do have an aligned interest. The aligned interest is we want to grow our tax base, so we're going to put these programs in place. And so they have so much data, and there's whole entities in the government and third-party nonpartisan entities that are specifically studying these programs, government-backed programs, to figure out how it can grow our tax base and thus our GDP. So I'll give you a perfect example. One, I didn't share with you, and one you actually said pre-production, okay? First example is Head Start. I was just looking at something about Head Start. So Head Start is pre-K and kindergarten for low-income people, okay? Head Start, when they studied it, that's another thing. They got all this data from years and years and years. When they studied Head Start, they see a direct correlation in the early years of these kids outperforming in school, and then it tapers off. But then when they come back 30 and 40 years later, they find out Head Start people make more money.
Oh, wow.
I know. Thus, growing the tax base. Okay? All right. Another example that we talked about is I asked Brandon while I was just taking some notes right before we did this. I said, Brandon, hey, ask a chat if we wanted to grow our GDP, where would we get the most bang for our buck? Okay. And it gave a couple of answers. The first one was infrastructure, which is why all of the money, the government money and all the bills is going towards infrastructure. Right now, we're trying to set up the technology infrastructure because we have completely fallen behind in the semiconductor production space. We used to be number one. We invented it. Now Taiwan they killing
it. Yeah,
they killing the game. Not only Taiwan, then it's a company out of Norway is the only company that makes the machines that makes the semiconductor. I think it's Norway.
I didn't know that one.
I can't remember the name of it. It's an acronym. It used to be like 3 or 4. But remember we talked about economies of scale. There are some industries that it only benefits that one. There's a monopoly. And so they all fought each other off. This company over in Europe, they make the machines. So look, right? They make the machines. This is another quick aside. NVIDIA designs chips. They don't make chips. They design chips. TSMC, Taiwan Semiconductor Manufacturing Company. TSMC, that's the large company that makes the chips. They make like 70% of the world chips. NVIDIA sends it to them. They make the chips. But this company in Norway, I can't remember, it's a 3-letter acronym. They make the machines. Okay. All right. So infrastructure is the biggest way that if a country wanted to, or the U.S. wanted to improve its GDP, infrastructure is number 1. Number 2 is welfare.
Yep.
Okay, so let me just say this real quick thing about welfare. Every time you see these arguments, right, left, red, purple, blue, whatever the colors are, they're all the same to me. Okay. When you see these arguments, oh, our tax dollars is going to fund, moms popping out babies. All those things. There are a lot of things that people aren't thinking about that actually benefits you. So it's really an investment. Number 1, when you think about your tax dollars going to fund people on welfare, you're only looking at the impact on the parent. You're not thinking about the impact on the child. Those kids who have food, they end up becoming higher income adults. Okay? So this helps our country in the long run. Then number 2, when you don't have people living on the streets, it directly impacts your quality of life. Imagine driving in your city and you done paid $1 million for your home, but you got 75 tents laid out on dropping the value of your house. Because guess what? That lady that's on the street, I'd rather be begging in your neighborhood, rich people's neighborhood, than the poor people's neighborhoods.
Yeah.
Okay? So you gotta, you have to think from a macro perspective. This is why these programs are in place, because they actually have a direct impact on GDP, both short term and long term.
Okay, so I understand the long term because I can clearly see the long term, especially what you're saying that the research shows that these people grow up to be higher.
You need me to explain it in short term? Because it's something that you gave.
What?
You said in GDP, for every dollar spent, it brings back $1.1 back into the GDP.
Oh, yeah, 1.5.
That's a lot.
Yeah.
So if the government can invest $1,
between 1.5 and 1.8, somewhere.
1.5, so you can invest $1 back into these people directly into their pockets. It ends up being $1.8 back into GDP. Now, does that directly come back? $1.8 into GDP, that money has to be figured out how to be calculated, how to be taxed, so it's not an even exchange, but it does help the economy as a whole.
Yeah, I see that. I mean, no different than them STEMI checks.
Right. You think they gave you the STEMI checks because they care about you? The best thing you can do, and this is what I want you to think about.
And that's really what took GDP to Like, after the stimulus checks, it was
They was out here balling. Nat calls it the bandemic.
the pandemic,
The pandemic.
PPP, STEMI, SBA.
All of that helped the GDP. Now, this is what I want you to think about. Right? I've never sang this song more in my life. All I want to say is that they don't really care about us. Y'all know our thing. Hello? Is this on? Right? Yo, the crazy thing is I watched Michael Jackson. Joseph, my son, loves Michael Jackson. All kids go through a Michael Jackson phase. And he put that video on and I was like, dang, this video is hot fire flame. Not to mention the message is so timely right now. So we're still going to keep that. But what I want you to, when you think and see they don't really care about us, I need you to have a different emotion that you normally have. Most of you will be like, oh man, it's so messed up. What I want you to first be like, I want you to be emotionless about it. I don't want you to be mad at all. I want you to be emotionless. The second thing is, once you're emotionless, then you can understand the best thing I can do is align my interests with the U.S. government. That's it. That's what, just align your interests.
Stop having cognitive dissonance.
Exactly, because you can't say that the government is so messed up, but you want yourself to do well, because guess what? You exist within the confines of this government, so you have cognitive dissonance. You want the government to do bad, but you do well? That don't make sense. That's what I'll be like, my thoughts when people be like, oh, America's this, America's that's why y'all never going to hear me say nothing bad about this country. Because guess what? I live in this country. If something happened tomorrow, when 9/11 happened, we all cried our eyes out for months.
Adopt the American way. That's what I told myself a while back.
Do you want to adopt the American way? I don't know about all that.
I'm saying the way. Well, what I'm saying is the way that they. You said align
your interests. Yes.
Align your interests. I mean, the way that they run is the American way. Would you not say?
So sometimes you took the language and used language that I wouldn't use, because some things about America is like really defined by greed. And that is the American way. Greed and gluttony. That is the American way.
This is my evil laugh.
I don't know about adopting the American way. I'm just saying, just align your interests, and at the end of the day, if you align your interests, you don't never want this place to fail.
Because you don't want yourself to fail. Some of y'all gonna hate me for that,
but they ain't gonna come get me. They ain't coming to get me, okay? Just align your interests. Teach your children the way they should go, and that's it. Keep it moving. Okay, so aligning your interests. I want you to remember that. That's going to come back in later parts of this episode, because I'm going to give you real life strategies about how to align your interests that you still feel good about yourself, okay? I want to recap something. I want to show it to y'all in a way that will make it easy for you. I want to draw a link, okay? So we started off by talking about debt, and I showed you that debt is specifically linked to tax revenue. So what I want you to see is it goes from workers, which is you and I, whether you are an entrepreneur or not. It goes from workers to business growth, to economic activity, to taxes, to the Treasury, to interest payments, to Treasury investors. So what I want you to see is Treasury investors, these foreign entities, you and me, the debt needs to be paid, the interest payments need to be paid, and guess where it's coming from? You. Okay? You are the product. I want to say this one last line real quick. So from workers to interest payments, when the government issues debt, I want you to think what their mind is thinking. Their debt, they're backing it with future tax payments. So that's why the future is important. Because when I asked you about how some of this stuff affects future versus now, you focused on the now. The future is important because we're issuing debt today based on future tax collections and the future size of the U.S. economy. So as much as we like to think about them only being in the present and being in the now and not thinking about the future, they have to think about the future. Number one, to their investors, especially the foreign investors. The foreign investors see all this. They have to feel confident that the U.S. is going to be able to pay the debt. So they see all the reports about our birth rate. They see the reports about our GDP size and the projections of the GDP. So we need to be responsible about doing things to grow it, which is some of the things that you're seeing Donald Trump relentlessly after. Because, hey, we got a maturity wall coming up. China just dumped more than $500 billion in U.S. debt. Real quick, this is a great moment. This is why you need to be on our newsletter list. I break everything down. If you are a regular viewer of this show and on the newsletter, please let them know how much I break it all down in the newsletter. You need to get the full picture. Some of y'all understand things better when you read it and you see the outline. I know the show is entertaining and I'll be giving y'all game, but I really give a full game away in the newsletter. Go to the link down below, sign up for the newsletter. It is absolutely free. Sign up right now. We got a maturity wall coming up. China just dumped more than $500 billion in U.S. debt. We got a bunch of things that we need to finance. We're trying to make America great again through these semiconductors. That say that's one of his plans. I'm assuming, because again, they never really fully laid out what make America great again means.
Right.
But like, we're trying to get manufacturing back, and we're going to use this semiconductor thing, which they are. They are going ham on trying to make Intel in the US be a hub for semiconductor production. Okay. So in order to do all of that, in order to make sure we can manage our debt, I have to show the world that the US is doing well. And we are going to raise our tax base. That's the product. So I'm going ham on all of that. So in his defense, I knew this is what he was thinking, but he didn't say this. To his defense, in that line where he said, I don't think about the American financial system.
I don't think about American financial situation. I don't think about anybody. I think about one thing. We cannot let Iran have a nuclear weapon. That's all.
In his defense, I didn't like it that he said it, and it was a Freudian slip. Don't get it twisted. But in his defense, this is what he was thinking about. I'm not thinking about that because I know if I think about this, that will take care of itself. That's what he probably meant. I'm still going to run with the fact that you got on TV and said, I don't think about you. I'm running with it because I ain't like that. You don't do that.
I'm going to say something.
And not apologize and not clarify yourself.
I'm going to say something that's probably going to have you like, what? And probably have people in the comments like, what? But I'm going to say it. I watched Cam Newton say something recently on an interview. Oh my God! But I also have
somebody I don't hear what they say. Go ahead,
but I've heard the statement being made before. And it basically deals with men and women, right? And it basically says the way a man operates, right, may come off selfish.
I saw you repost that.
Yeah, it may come off selfish, but it's ultimately for the good of everybody around them. That was the basis of it.
First of all, let me give you all the clip. I probably will post it. Young Miami said, I can't bear to listen to Cam Newton talk. Young Miami said, one thing I notice about men is that men only care about themselves. That was what she said, right?
That's what she said. She's men selfish.
Yes. And he said,
in so many words.
I'm just laughing because because as I'm replaying myself as listening to it. First of all, I couldn't take him seriously because he had his legs out. He had the thighs out. Y'all know me. Sometimes the outfit is legs. That's my thing, is legs. Okay. Sometimes
and it was crossed. That was crossed.
And it was crossed, and they was like. Not to mention, he had a hat with pearls on it.
That means he meant business.
No, the business is not what he. And if by business you mean, I was gonna say something so inappropriate. By business you mean, I don't know. Okay.
So essentially, I was
laughing.
saying,
I'm sorry. I'm trying to recap. My brain is laughing at this because Brandon posted it, and then I'm like, I can't take nothing he says seriously. Okay. can't, especially not after Eclectic comment. I don't know if you saw this.
I saw it. I know what you're talking about. I know what you're talking about.
I laughed about that for 4
But it's not
days.
just Cam though. A lot of
All right,
men.
let me finish. So basically, what he said was that it seems like men are being selfish, but in order to take care of everyone around us, we have to put ourselves first. And so the motivation is you guys, but in order for me to carry you guys, I got to put myself first. And that was his argument.
Mm-hmm. So I was relating that back to kind of what Donnie might have said
what
on the
Donald Trump might have been
yeah.
saying. Yeah.
From a standpoint of, lack of better terms, the man of the United States. I mean, he's the president, so.
I think there's a I don't want to say a fine line, but it can be a blurred line between self-control, self-discipline, self-love, and self-centeredness. And so when it moves into self-centeredness, when you say that is your motivation, but you end up doing more harm than good to the people around you.
Fair.
Right?
Fair.
And so, the people that love Donald Trump always say, like, he really looks out. And you see he look out for his family. But, like, in order to help 50 people, you're harming 50 million. That moves into self-centeredness. Same thing with Eclectic. That's going to be forever his big name for me. Same thing with Eclectic. If, in order for you to protect however many people in your sphere, you end up putting out a lot of toxic masculinity rhetoric on the internet every week. You're harming 1 million a week. Or I don't want to get personal because I don't know his life. You know what he put out there, and sometimes things aren't what they seem, so I'm going to give him that. But that moves into self-centeredness. It's a blurred line. I don't want to say it's a fine line, because it ain't. If you keep your mind in the word, you can be like, I can't do that. And people make mistakes, but he get on the internet every week until he started getting checked by some of these brilliant women. He had a nice run of toxic masculinity.
Now don't end up on the Cam Newton show.
Please
man.
don't.
I'm talking about
Cam,
you.
I know. I'm saying please don't, y'all. Don't say. Sorry, Cam. Sorry. I don't want no problems.
But I don't want
Enjoy
you to
yourself in your league.
I don't want you to get veered too far, because what you were saying is
I ain't even get to my main
something
point yet.
that I had
Crossover.
been taught from my grandfather as a child, like growing up and working and stuff. He was always instilling in me, you never count more than what's in your pocket at the time, right? So if you gonna get your paycheck, you don't count it because you don't got it. But the American structure is the total opposite, the complete opposite. So people are living like this while the system is running like this. And so I just thought that was very just...
Yeah, it is interesting. It's interesting. We talked a lot about this on the U.S. debt episode, where we talked about that. It's just a culture. It's a culture. America, we did need a lot of money to finance the expansion of this place, and even probably still, because we're still a new country, right? We're only 250 years old, and they rocked the house. And we still need more money, and so as a result, that culture has trickled down from America, the country, financing its growth, to this is the way of American life. Okay, debt, and so it's just become a whole American culture. Let me take a quick aside. I learned it's an important aside that will help you all understand this. I learned something. Listened to his lecture about 1974. They made a change to who controls the budget and how funding how funding happens in the U.S. From 1921 to 1974, the president had a lot of influence over the budget. Congress ain't like that. They made a new set of laws that basically took a lot of power away from the president, and this is why bills have to pass the floor and all of that stuff, okay? There were 3 things that this bill tried to do. 2 of the 3 things were successful, right? So, like, it actually established this change also established the Congressional Budget Office, the Congress Budget Office, which is a whole different office that analyzes the budget. Okay, that's another conversation. I'll probably talk about that on the next episode. Let me know in the comments if y'all want to talk about it. It is really fascinating to understand how money really moves in the government. Really fascinating. And the reason why I want y'all to, the reason why it's fascinating for a number of reasons, but the main thing is it will help you to understand how to align your business and understand how to align your investment. We'll talk about that in the next episode. Okay. The thing that it didn't successfully do is there is no aggregate way for Congress to control spending. You're like, what do you mean? This is why we have so much debt. Mm-hmm. Because think about your budget, right? Let's say you make $10,000 a month, okay? Mm-hmm. You have a control over the aggregate. What if I took away your right to control how you allocated it and made you go and fight for the different needs that you have every single day?
What if you took that away from
took you? Took away from you to aggregate control the budget and made you fight for your needs every single day? Like,
well, you know, my brain works in like anagrams and analogies and stuff like that. So
I'm going to give you an analogy.
Like a wife make 10,000 and just bring a paycheck home to a man, and her
Similar,
man just,
but I'm gonna give you a better. It's probably the same one, but I want to give you a better analogy. Actually, I had a friend that she was a stay-at-home mom, and thank God she divorced this man. He was awful. She's actually a friend of a friend. Let me be very clear. She's a friend of a friend. He was awful, and he was the breadwinner. He made a lot of money. And every day they had a kid. She was a stay-at-home mom. Every day she had to beg him for $50, $100 to get food and gas. So this is what Congress is doing. If every day you got to beg to get food, gas, what if you need to get some skincare? And he's literally like, no, I'll give you this for that. No, show me the receipt. You can't think about the totality. You can't like really properly plan. And so what end up happening is got all these senators, Congress people, they're fighting for their lives every day over dollars, but they can't control the aggregate.
And you're saying who's controlling the aggregate?
Nobody. That's why we're in debt. So I'm giving you this option. I'm telling you this is one of the reasons why we're in debt, because there is no system in place to control the aggregate. So think if you're that woman, right? And you go and you say, husband, I need $10, I need $50 a day to go get some diapers and some food. He says, I give you 40. You gonna go to your mom for the 10.
Well, when I say
listen, you gonna go to your mom for the 10. That's day one. Mom, can I borrow $10 from you? Okay. Day two. Hey, husband, I need $50 for gas. I'll give you 30. Mom, can I borrow $30? Okay. Now you in debt $40. Okay. Day three. Now you gotta get some formula. Husband, can I get $50 for formula? I give you 20. You just keep going more and more debt. As opposed to your husband sitting down with you saying, hey, every month you spend this in formula. You spend this in skincare products. You spend this in hair care products. I gotta get your nails and your toes done. You spend this. Let's put together a budget, and I'm just going to give you that. And you balance it yourself. And so when we don't do that, you end up being in debt $41 trillion at the end of the month to your mom and other family members.
In this scenario, though, with our society, the government is the husband and the wife, though, right? Like it's doing it to itself. No. Like, cause when I was asking,
not really. The government,
like in that scenario, who would be the husband? Who would be the? You say the senators are, but who would be the husband? You get what I'm saying?
Yeah, I understand what you're saying. I think the wife is the American people, and the government is the husband. Now, this is why we have all these different branches and departments. You can argue that it is both the husband and the wife, for sure. But who it ends up affecting, the wife is the American people. And the Senate just is the representatives. And then the Treasury is the husband. Or we could go with your either or is messed up.
No, that makes sense though. Yeah. Like
so this is why we're in debt.
Yeah.
So actually that was a good transition. I hope y'all still with me. Because we talk so much about debt, now we need to talk about equity. Okay? So, all right. A couple trends that we noticed is that foreign investors have been not investing so much in the U.S. over these last couple years. It has gone down drastically, bro. Drastically. Okay, I'll give you all some numbers in a minute, but I want to get this point across. They have not been investing as much. So where's another way that we can raise money to grow GDP? Public markets. Okay. So all you stock traders, hooray! Now I'm going to give you some news that salty you right on up. Do you know that from its peak in 1996, the number of publicly traded companies went from 8,000 to right now we're at about 4,600?
What? Publicly traded.
Publicly traded companies went from 8,000 to 4,600. There's a number of reasons for this. Number one, it's no longer attractive for companies to be publicly traded. So remember I always say you follow the money. So if companies are pulling out of the public markets, why is America, I know why are we keep putting our money in the public markets? Y'all know I'm a private market. Y'all know my thing is private markets. Why y'all keep putting your money in the public? And they done reduced their holdings over the past 30 years by almost halved it.
Yeah.
Okay. Companies are doing less IPOs. So I know everyone is so caught up. That's another thing. You always got to remember, they're holding something here and they're trying. This is a distraction. SpaceX IPO, Anthropic IPO, OpenAI IPO. No, the reason why they made these rules on paper, why they made those rule changes for SpaceX, the NASDAQ, is because there has been a substantial drop in companies doing IPOs. We have a weird season right now with not just them. It's some other companies that did some IPOs where we have an insane amount of IPOs, but overall, massive drop. Companies are also taking their companies from public to private at high rates. So what's the effect of that? And this is economics 101. Less supply, more demand, because guess what? You already put me on. They changed the rule for day traders. Anybody can be a day trader right now. They just unlocked it completely.
They just turned it to prize picks.
Before you had to have a reserve of 25,000 in order to day trade. Now it's 2,000 overnight. Remember, liquidity harvesting.
Some brokerages have no minimum.
Some brokerages have no minimum. Liquidity harvesting. Hey, we need to let y'all in here because this thing is drying up. Foreign investors are pulling out of the U.S. stock market. They're pulling out of the U.S., but out of the U.S. public stock markets as well. So, economics 101. You have increased demand because now day traders, y'all been jumping. Y'all been growing like crazy. I remember day trading used to be like super secret society of people. Everybody became a day trader. Okay. Increased demand, decreased supply. What happens when that happens? This is economics 101.
You asking me?
Yep.
Increased demand,
Decreased supply.
decreased supply.
This is real. You want me to tell you?
I feel like if the supply right, is low and the demand for it is high, then that means whatever I need gets expensive.
Price goes up. There you go. Ding,
Yeah.
ding, ding. Price goes up. So this is why I keep telling y'all. Valuations of public traded companies are crazy high. This is why SpaceX, their strategy, normally when you go public, your strategy is to have 5% go to retail investors. They said, no, we know that money not there. Private or institutionally, we know that money not there. But you jokers, y'all still want more because y'all still think stock market. 30%, that's in there, S1. 30% is going to retail investors. Therefore, we can justify this 100x revenue valuation. Isn't it 100x?
Yeah.
We can justify
1.75 trillion right now.
100x revenue valuation, whereas the other companies is like 13x, 100x.
You know my theory. We talked about it pre-production. I think it's. I mean, you said it. We agreed to a certain extent.
What did I say?
That it's a cash out.
Oh yeah, no, we agreed. You had a two-part theory. I agreed to the first part. We talked about this. That the SpaceX IPO is a cash out for its original investors. Period, point blank. So I saw somebody, I forgot to mention this too. Somebody really made the crazy connection that the whole point, this was really a cash out, not just for their investors, but for Twitter investors, X investors. Because X is owned by XAI, which is owned by SpaceX. Which, we can tell about that story. So real quick, this is why you need to watch out for AI. Brandon has this theory. The second part of his theory is that Tesla is going to buy SpaceX. And I'm like, no, that's not going to happen. We get into this whole conversation. I say, he started naming all the sub-entities. XAI. And I'm like, XAI is owned by SpaceX. And he's like, no, it's not. Yes, it is. Ask Chat. He goes to Ask Chat. Chat's like, no, it's not. I'm like, bro, are you kidding me? I said, tell it to reference the SpaceX S1. And it did. And it was like, no. He just literally said, reference the SpaceX X1. It was like, no, it's its own company. I'm like, bro, what are you talking about? So I pull up the SpaceX X1. I said, Brandon, come over here. Pull up the SpaceX X1. I'm like, do you see this line? It said February 2026. SpaceX bought XAI. And it mentions XAI 400 times under the search. It mentions it 400 times in here. So then I sent him the link and then it fed it to Chat. It doubled down on the wrong advice twice. Mind you, this is big world news. Okay, anyways.
I know that was the hallucination of AI just now, but you were saying that because of
the valuation.
The theories.
The valuations are going up. So anyways, whole point that I'm making is the valuations are inflated because right up under your nose, the supply of publicly traded stock has gone down right up under y'all's noses. And y'all still trading like it's 1996. Because y'all watched all them stock movies from 1996. And you want to be like in the stock movies. And you want to be doing that. Meanwhile, this ain't 1996.
Wolf on Wall Street.
Wolf of Wall Street, that told the story about 1996 when it was balling. Now, you don't got that many stocks. The valuations are up.
Yeah. I didn't know that about the 8,000 to 4,600.
You learn something new every day.
It sounds very concentrated though. Like when you think about it in number scale wise, it sounds
very
like
concentrated. So if it's concentrated, that means there's opportunity elsewhere. So we'll come back to that in a minute. But what I do want to point out is that investors still do want treasuries. That demand hasn't changed. But people are pulling back on investing in the stock market. They're pulling back on IPOs. Everything is shrinking over there outside of the valuations. Okay. So what does this mean? This means as far as U.S. investors go, what investors want is they want backed securities. A treasury, anytime you have debt always has a higher priority of repayment than equity. Okay, so if you're thinking about the U.S. doesn't sell shares of itself as an equity, but if you're a foreign investor and you know that the U.S. is a corporation, what you will be thinking is Treasuries is the debt and the equity is the U.S. stock market.
Yeah,
okay?
you helped me understand that when we talked about like if a public company went bankrupt or something like that, how would the money get
How would the money
allocated?
get paid back? Debt always first. So investors are saying, I'm still rocking out with the debt, which means that I still believe that you guys can make money from taxing your citizens, but I'm not so sure that y'all can make money with these companies, these publicly traded companies. I don't know. Also, too, it's not like equity is not backed by anything. Okay, equity is, think about Enron, all the stockholders. Enron, we go under, y'all went under too. Bye, let's go down together. Whereas if you are own debt, Enron, they sold off their assets. The debtors might have got some pennies on it. They get something, but you equity. I'm out, we out together.
Yeah, we all living in a house that burnt down.
Right.
The house burnt down. We
Good
all
night.
our stuff lost.
Right. Good night. Good night. So I want you to think: Treasury demand is here, equity demand is changing, or demand is increased, but the actual supply is decreased. So investors are demanding something very, very different. So if you are investing in your portfolio with the same allocations as 1996, or based off of advice from 20, maybe even 10 years ago, you need to rethink this. Okay, so what can you do? I hope that you got the hint. The hint is private markets. They are undervalued. But specifically, micro private equities. It's something I kind of came up with. Because I've been talking about this and I realized that you guys, here's the thing. On this show, I know what I like to talk about, but to get into the weeds on how to invest, that's something you're going to have to do when you join our community, because that's reserved for that. I know I can't give y'all how to invest in private markets but so much on this channel. If you want to go deeper, join our community, join the Profit Door Private Investor Network. I'm gonna probably do a series on how to do this, but I do want to give you some major tips. And the whole point of this episode was for me to show you the evidence written on the wall around why micro private equities can and will outperform. And I hope you picked up on that.
Micro private equity.
Yes, small businesses. You create your own. I got some tips for you. I got some major game for you.
As you were talking, I thought about another conversation that I was having with an individual yesterday, and shout out, Mr. Outlaw. But
Shout out, Mr. Who?
Outlaw, that's his name. That's
Hey,
his
Mr.
name.
Outlaw, how you doing?
But he has group homes.
Mm-hmm.
Group homes, and
He probably making a killing.
and I was just like, that's guaranteed. That's guaranteed money right there. He was like, yeah, you get group home and you get $300 per person in there. Like,
So in the Profit Door, actually, we got somebody coming up talking about, I can never remember the name of what it's called. I always want to call it assisted living facilities, because y'all know we do assisted living facilities, which is another way of making money using private. I'm sure there are some publicly traded companies that invest in assisted living facilities, but y'all know we have a private equity fund and we invest in assisted living facilities, which is basically old folks' homes, okay? But specifically, we have somebody coming and talking about, I cannot remember the name of it, but it's assisted living, but for mentally challenged and disabled people. Okay, so that's a whole play. I know multiple people that make a ton of money doing this, a ton of money. So we have someone coming in who's going to teach about this. So the way that it works is mentally challenged, disabled people, sometimes they need a whole staff to take care of them. So you have a home, depending on the person, and the state pays for it. Depending on the person, the state will pay anywhere from $10,000 to 50,000. Know somebody who has a really challenging case that they get 50,000 a month for this one person to house this one person.
Is that money that flows into welfare?
No, this is not
That's
welfare.
something- that's
I don't
something-
know what it comes through, but you know, back in the day, the state used to handle this. And I guess they decided like, well, you can't do that. So they privatized it. And so you have to get some licenses and, you know, you got to secure the house. You have to get your staff and you have to do a lot of compliance in terms of logs and documenting things and all that stuff. It's a whole system that you have to learn, but you can make a whole lot of money paying people, I don't know, $15, $12 an hour round the clock, depending on how many people that this person particularly needs to take care of this person. And you put the money, you profit the rest. I know people making bank. You literally go from zero to hero because the state pays for it.
So is that through like Medicaid, Medicare, or something like, or is it something totally even separate from that?
No, I don't know. I don't know what government entity pays for it, but I'm sure it's probably Medicare or Medicaid.
Yeah.
But just think, if you have a disabled child and you need care, you just fill out the paperwork and then you can get the person a home, depending on the level that they are. Or, you know, maybe sometimes it's like 2 or 3 people in a house, depending on the level that they are. And so, you know, you got all these entities in the government that come in and assess and all that stuff. And all you got to do is facilitate that business. And it's people, you ain't got to know nothing. You can have a criminal record. I'm sure it probably changes for the state. You ain't got to you just got to be able to get the business up and make money. One of the people that I know, she had a business. A guy I used to date partnered with her because he wasn't doing all that, and they made money and held hands off into the sunset. Not together because he's married to somebody else.
Yeah.
And he's like, all right, you need 50 racks? Here you go. And then I'm sure, let's say they did it 50-50. And I know she had like 3 people in her house. So let's say she's making 75 a month. He put up 50,000. She making 7. These is rough numbers that I kind of know, but really don't know. So don't take this to the bank. She making 75 a month. Let's say her overhead is 25. That's 50,000 profit. He get $25,000 every single month for doing nothing but putting up 50.
Bar. That's a bar.
A bar. I know so many people that do. I'm literally thinking 1, 2, 3, 4.
But that's all you've been saying.
Episode
after episode is invest in small businesses.
Small businesses. And guess what? That guy who invested in that, he also part owner of a restaurant. And I'm sure I went to Philly just talking about it, and it was like, hey, have you gotten from da-da-da-da restaurant? My girls. And it was like, one of them was like, I ain't really like it. The other one was like, I got it, but it's expensive. So he regular, a regular human.
Be the liquidity.
Be the liquidity. I think they had some press coverage, so he faked like he was cooking stuff, but he ain't cooking that. I know him. He ain't cooking nothing. I mean, I knew him. Let me be very, very clear. This was years and years ago when I dated him. And it was just a couple dates, that's it. He's happily married, beautiful family. Okay? All right, so I wrote down something that I want to share with you, but I want to read it because I'm not even going to try to act like I have this memorized. So before, with private equity, right? Startup, venture capital, IPO. That was the plan, okay? That's how SpaceX, it was a startup, raise venture capital, IPO, cash people out. But now it's a little different. You have just the democratization of all of this is different. You can go from, operator to small business acquisition, holding company. You can go from having an audience to building a community to cash flow to acquisition to ownership. You can go from being a creator to a media brand to cash flow, buy any businesses. There's so many different ways that you can do this, from bootstrapping and not being like, I got to put all my eggs into this one basket. Now, keep in mind, if you're going to go on the operator side of this, right? Remember I gave you an example of Homeboy. He's the cash. I know he's not no idiot, so I'm sure he understands business, but you can literally you got to know some stuff, but you don't got to run a business. So keep in mind what your strengths are. Do you know how to run a business, or do you know someone that you trust? I said this over and over and over again. Make sure you know your lane. Don't buy a business. No, you don't know nothing about running a business, or think you know something about running a business, and then you buy the business and you're supposed to be the CEO, and now you sitting there, now you got to cut up some onions, and you ain't never cut up an onion before. Or manage payroll, or manage a budget, or manage your cost of goods sold, or like anything that, you know what I'm saying? Real quick, I want to also talk about something else called a search fund. This is something that was popular in the past and is an option that you may want to do. Actually, a hot fire flames option. So let's say, for instance, you got some people that got money, and y'all both decide that you're like, hey, let's go acquire some businesses. Pick the person that really understands how to operate a business, or really understand business the most. You raise capital to help this person for the next year or two go and find a business or a set of businesses to buy. Okay? This is literally a fund set up to fund them to search for the business, because investing in businesses, visiting them, having the time to be able to do this 40 hours a week, 60 hours a week, that all costs money. This is where we be messing up at, right? We don't factor in the value of our time as we are doing our research, right? And so y'all put this together, you come up with anywhere from $200,000 to $500,000 specifically for that, okay? Then you go and find a business or businesses, take stake in them. You then go to another group of people, like now you've put together this portfolio, you've underwrote everything. Now the real capital raising comes into play. You go and raise money to buy these businesses to start that fund. You cash out your original investors, or they stay in or whatever. That money goes to acquire the other businesses. We don't have enough time because you have to understand the business structure of how this works. Let me know in the chat if y'all want to understand how this works. Actually, I completely forgot about this. Our offering for the week is down below, but in it has a course where I talk about how to structure it. Your management company versus the fund, all of that. Take the course. It's only going to be available this week only. The link will be down below. Take the course, especially if this is something that interests you. This should be something, especially for those of you who you want to make money, you just haven't figured out. This should be of interest to you, because again, all this stuff is undervalued. All of it. This is where the opportunity is. This is America. All right, cool. You raise more money to acquire the business, and then pay the other investors back, or however y'all work this out. And then you can either, because you done learned how to run a business and you already know this stuff, you can be the CEO. You've given yourself another job. You can be the CEO of this business, or you can hire someone else. You gotta structure all of this properly. You gotta understand what your exit plan is. But that's called a search fund. You raise money to fund the search. Okay? I hope y'all be taking this stuff and like taking it seriously, because I'm giving you game. I don't know how to stress this. Okay?
I think they know the game though. They know. I read the comments. You read the comments. They know you giving game.
I appreciate y'all, but I want y'all to execute. If you got problems with executing, I got something to sell you for everything. Okay. If you have problems with executing, I realize that
got something to sell behind you.
I do. My book, The Anti-Hustle. Thank you very much. But this isn't my book, The Anti-Hustle Christian Business Book, Hot Fire Flames. We sell a lot of this darn book. I'm grateful. If it was on Amazon, I would be in the top. In our private investor network, the first thing you take is my God Goals and Money course. It's all about teaching you how to execute. Most of y'all think y'all know how to execute, but you don't. If you got analysis paralysis, or you have anxiety, you have imposter syndrome, that is a sign execution is a skill. Everybody don't come here knowing how to execute. It's not something you're born with. It's a skill you have to learn. Prioritization, all of that. This is all the stuff we focus on in our private investor network. The link will be down below. As soon as you come in, you get access to our accelerator on how to do it. So I hope y'all be executing. That's my whole plan. That's my whole statement. All right. What can you do about this? First things first, I need you to stop thinking like a ticker picker.
Thinking like who?
Ticker picker. What ticker do you buy?
Oh, a
what
ticker
stock
picker.
Do you buy? You need to start thinking like an investor. Now, sometimes thinking like an investor will make you think like a ticker picker, but stop just think. It drives me crazy when I see investment advice that is that. You are missing an opportunity, because here's the thing. When you think like a ticker picker, that skill is not transferable. You can't take ticker picker think and transfer it into running a business, but you can take running a business into ticker picker think. Think Warren Buffett. He knows how to buy businesses. Mm-hmm. It transfers into being a ticker picker, but that skill is not transferable. It's a very unique skill, especially day trading. Candles don't exist nowhere else in nature.
That's
a bar.
That's very good advice, though.
Yes.
That's very good advice.
Yes. But you can learn how to really truly be an investor and apply it to candles. You're not going to find candles in the back of the HVAC business. Mm-mm. The next thing is you need to start building your own capital pool. Do you have to have money in your pocket right now? No. But you always need to be thinking about, how do I position myself to attract capital? I want you to pay how I worded that very close attention, because some of y'all is not going to be comfortable with going around asking people money. What I want you to do is make yourself a magnet for it. How do you make yourself a magnet? Understand this stuff. People will be around you and will be like, oh my God, this person is so smart. And start showcasing your knowledge. Start studying this stuff. Going into the rooms where people understand this. It will find you. Change what you're posting online to start talking about business evaluation. Stop posting your butt.
Okay,
sports.
Auntie said stop posting your butt.
You don't want to say ASS. Stop posting your booty and for men. Stop posting sports. No one cares. That ain't making you no money. Put the phone down. If it's not making you no money, you not got to practice. I do this. It's a little thing that I do. When I be online, and if I am scrolling and I see something very salacious, this is a habit that I do. I love this. I see something salacious and I want to share my opinion. I type it and I don't hit send. I delete it. Sometimes just typing it gives you what you need. And I delete. Because I don't need y'all distracting me with notifications, disagreeing with me. I also don't want to feel like I need to start posting about whatever this thing is that I'm seeing people say that's stupid.
And then it also feeds into your algorithm, though.
Right.
Like if you hit send on the comment, now the algorithm gonna start sending you more stuff like that.
No, I want to keep my algorithm straight up finance. It's a little ratchet right now, but I gotta bring it back. But that's okay. I don't even be on it that much. And so I'm saying all this to say to you, when you feel the need to post about sports or your butt, pretend like you're going to post it. Don't hit send. Okay, so be intentional. You don't have to be a big brand. Be intentional about building capital pools. Attract the money. It may require a totally different identity shift. Do you have to be like superstar? No. All you got to do is know a little bit more than your squad and put together a play. And last but not least, like I said, you need to align your interests with the government. City council, go to your city council, find out meet with your city council people, find out what they want to do. Figure out how you can get up in there. This is the easiest place. Go find your local, go meet with your city council people at large. They'll meet with you. Go to city council meetings and say, hey, I do such and such. I wanted to know if I can schedule a meeting because I want to figure out how to help you reach your goals. I promise you they will do it. Set up a meeting with them. Go down there. Find out where the money is. They got money laying around and opportunities laying around. Align your interest on a local level. Do it. Now, let's talk about on a federal level. Go to the Congress budget website. It is a really wonky website. Go look at these bills. Find out where they are slating money for. Align your interest. Just tweak it. Just a little. You got this thing you want to do over here? Just tweak it to the left. Just a little bit. There you go. Align your interest. You don't have to sit at home hating the U.S. government.
That's deep. That gave me a new title for you, but
What's the new title for me?
it's not even a title. It just gave me a new thing that, as you were saying, that probably you could do as far as like when you said that last piece. Like you being a person good at finances or maybe structuring business or allocating funds, showing a government how to properly budget.
I told you this before, I would love to do that. But these jabronis think they got it all figured out. That's why they go and get the jobs, because they want to control the money.
Oh, that's what you were saying when I said Nicole for president? You were saying, no, not that, but I do this.
Yes. I would love to do that. If a government hired me as a consultant, you ain't got to do what I say, but if I'm so good at some stuff like that. Government, I'm thinking about a particular location right now. They just need me to put together, just pay me like 25 recs for a plan. I will do it. I would love to do that. I would love to do that. I am so good at that. Here, I want to give you something because I just so happen to be sitting right here. This book. This book is one of my favorite books. It is a workbook, one-page business plan. I want you to get this book. It's broken out into 5 sections. The first section is the vision section. I want you to just focus on the vision. You can do the rest of the book on your own. Get the book, focus on the vision section. Take a picture. It's like 3 or 4 pages that explains the vision section. Take a picture of it, okay? All 4 of those pages. Upload into chat and say, chat, this is what I want to do. What I need you to do is take the information from these pages. It knows the book, but you have to take the pictures, upload the pictures, because it will give you some bull crap. Even if you say, based on one-page business plan by Jim Horan, it won't give you what you need. You got to send the pages. Okay. Based on this, I want you to help me to craft a vision that aligns with current local and federal government initiatives. How can I tweak my business plan? Let me tell you how I know it works. Because, I run a cohort once a year. This is not our private investor network. I am not marketing to you because we're closed for the year. I only take on 5 people. Because I always get people that be like, I want you to coach me. I don't want to do it one-on-one. I do a 501. And I don't want it to get too big. I've done it in the past where it was too big. I didn't enjoy it. 5 people, they're in there. And one of the people, this is their second time in this, because I took them from 0 to hero, and they want to go from hero to superhero, okay? So this is their second time, so I know so much about this person's business. And we had a conversation. They needed some things done. I said, listen, give me a brain dump, because they was trying to figure out how to align what they're doing with what's happening locally for the government. I said, do a brain dump for me. It don't have to be organized. Did a brain dump. Went through the brain dump. Pulled this out. This literally took me an hour. Now, it's not going to take you an hour. I've been doing this a long time. I'm sorry. It didn't even take me an hour. It took me about 15 minutes. It's not going to take you 15 minutes. It's not going to take you an hour. I've been doing this a long time. Took this out. Then I fed this. Took the pages that I wanted to tweak so that they can figure out how to position themselves to their government, and said, and then they also had some other official government documents that they specifically wanted to target. And I said, I need you to come up with a story, right? The narrative, the vision. I had some other things that's from the book. I need you to come up with this because I see it, but I need them to understand. Like I saw this when they came on in my community 2-3 years ago. I'm like, oh, this is easy. You did it. Oh, this is easy. But I needed them to see it and believe it before they go and pitch it. And so now they have something that directly ties into what their city is already has money allocated for. Because guess what? I know you want the city to care about you as a person. They don't. You have to align your interests. They want to grow their tax base. They don't care about your heart. They don't care about your diet. Only if it grows the tax base. City's a business too.
I hope they paying attention to this
I hope
one.
they are.
That's
I
a good
do.
one.
Because
That's
you
a
got to
good
get
one.
the hate out your heart. You got to get the hate for the government out your heart. And you're mad at these people who get in these government contracts, Palantir, all of them. Now, I'm not saying that they out here doing good, but you mad at them and all they did was read the paper. Went to the website. Oh, they want to do this? Okay. Or they took it a step further. They had money, so they went and hired a lobbyist. Because that's the thing, too. Lobbyists aren't that expensive. I know a lobbyist. They're not that expensive, especially on a local level. If you got a whole industry, get a couple of your people to put the money together, hire a lobbyist to go and all day long talk to the city council, pass this through, so you can align and make and get your money.
Free game.
I be trying to tell y'all. All right.
Free game on the profit door.
Free game for the profit door. I be trying to tell you how to maneuver. When I was in Philly last week, I had a whole meeting with a whole powerful being. And I'm going to get some things done. We sat and we chit-chatted for a long time. We left that meeting. It was like, all right, send me them documents, Nicole. All right. See you later. Called the assistant in the room. Yo, set up this meeting with Nicole and I love y'all. I do. I'm not exaggerating. Stop playing, y'all. Stop playing.
Get it done.
Woo. Crazy? Yeah.
We're gonna cut it, but you heard Chat out lost 20,000 this week. Was like,
You want me to cut that part?
no, you can leave it, whatever. Yeah. But yeah, Clyde over here telling me I lost 20, and then
I hope specifically you, are taking this and understanding how, like, take whatever it is that you're doing and you got to parlay it into something. Even if it is long-term with the stock market. Because the day trading, I love, I know, y'all know I be trying to, like, leave y'all some slack. But it's gambling. Especially now. Let me tell you why it's gambling now. All the technical analysis that you're learning is based on the past data about the stock market. It is changing very rapidly right now. And so how it's going to behave, we have no data on it.
yeah,
Two things that's happening. One, obviously, the demand is high for a little bit of supply. Okay? So this is causing artificial inflated valuation that we don't really have that much for. Then the second thing is the influx of day traders that's not trading off of fundamentals. You have too many people trading off of technical, and some people who just straight up, way too many people just straight up betting, trading off of neither. So what I'm saying is that's going to cause the market to behave in different ways than it has behaved in the past. So all the markers and ticker and things that you use to try to determine where the market is going to go, they won't work. They're going to start working less and less and less. In addition to it's just going to start working less. It's going to behave so much differently.
Yeah, I mean, I see that now, doing back research and stuff and things like that. I mean, in part is because our GDP is going up and things like that. But like Friday, the stock market dropped 5%, right? Which was like,
But do you know why? This is not even about that. You know why? Because we got these. I said this on a short. The IPOs, all these IPOs coming, they have to liquidate. So I said this. I said expect the stock market to drop because they want to get a piece of the action.
5% the week before SpaceX IPOs. Yep.
I said this. I said be prepared because it's not just SpaceX. All summer we got a wave of new IPOs.
Anthropic, one of them, right?
Yeah, but it's some others that we don't even, that's not even like famous. It's an insane amount of IPOs happening right now. And so I said this, see if I can find a clip. I said, be prepared. You're going to see a little dip. And then here we are. It's starting. It already technically has started, but right now, like, especially with SpaceX, like, we out here. And then we get a dip. They sold so they ain't want to wait until the day of because the market really going to be down that day. But I said this. And nobody wanted to listen. It's like, oh my God. Well, not. Some of y'all might have listened. I don't know. But sometimes I'll be saying stuff so far in advance. And then when it happens, it's like, I said this.
Yeah, I was trying to get I had a plan. I still have a plan. I'm not going to say I had a plan. I got a plan. One of my plans was to get this dollar amount in there. And then I was like, well, I'll take out $25,000 and then I'll put it in the Codes fund. And yeah, because we got to
took money out of my pocket. Out of my mouth.
But I was just like, yeah, maybe I'll put it in the fund or whatever project you're gonna be working on. But I'm like, yeah, I gotta get in there some kind of way, you know. But yeah, and I was very not too far away from
that number. You got greedy.
I didn't even get greedy. I just never pulled out anything. I mean, I did to buy stupid stuff.
So next time, this is what you should do. Beforehand, set a low amount. I don't know how traders manage their take home. I'm sure do they teach you that in trading school?
I never went to a trading school.
In your trading classes or whatever you learned online?
I never did it.
You never did a class?
I've never did a class. This is all YouTube University and deep study research by
That's what
me
I'm saying.
myself.
So on YouTube University, they don't teach you how to pay yourself?
They don't teach you how. They just say you need to be good at it. And it's a form of risk management.
I hear that, but then one thing that they should teach you is like how much of your re-up money you should take to pay your bills.
Never has it been a specific amount, if that makes sense.
I'm
Not
sure,
like a 30% or 20%.
I'm sure. Let us know in the chat if there is an influencer that teaches this, and we can direct Brandon to it. I'm sure that someone does teach it. Let us know in the chat.
That's actually a really good point because that's something I was talking to my wife about. As far as that's where I'm really bad at, honestly. As far as figuring out how to pay myself. What do I pay myself?
So I highly recommend everybody read this book. There might be a profit first for traders, day traders. That will tell you. If it is so there's a book called Profit First. The guy who wrote the book, he also has franchised out, because the book was so popular, the name with so there's a Profit First for real estate investors, Profit First for this. Actually, the guy who did Profit First for real estate investors, he had me on his podcast, and we got videos on this channel together, actually. So he did my channel. It's like a year ago, and then I did his. David Richter. Nice guy. So Profit First is a system. I use the system for managing how you pay yourself and how you pay your bills and how you pay your taxes and how you pay your profits. Okay? There may be one Profit First for day traders. Because so what he does is he'll lease it out. The other person will write it, and then they're co-authors. Because they're taking his framework and they're tweaking it, because every business is a little bit different. So they got a Profit First for construction workers or contractors. Yeah, Profit First for contractors. They might have a Profit First for day traders. I don't know. But if they don't, Everybody should read Profit First. Everybody should read that book.
Definitely gonna look at that.
And if not, ask Chat. You know Profit First?
Or ask you. Or ask Nicole.
Or ask Nicole.
Or ask you.